My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, to teach, and put days like today into context. So call me at 1-800-743-CNBC or tweet me, of course, at Jim Cramer. Should it bother us? Should it bother us that the President of the United States makes major policy decisions based on the day-to-day action in the stock market? Is it wrong when he puts his thumb on the scales of favor of the bulls? When I say that Trump is the most stock market sensitive president in modern history,
Trump stock, Trump stock, Trump stock.
I'm talking about days like today, where the Dow jumped 373 points, S&P surged 1.48%, and the Nasdaq pole vaulted 1.95%.
That was easy.
All because the president delayed some key tariffs that were supposed to go into effect on September 1st. Instead, certain important items like laptops, like cell phones, are now exempt until December 15th. So at the very least, many companies have more time to adjust. And maybe they never get hit at all if the Chinese agree to make some real concessions. Why did he do it? I think President Trump saw the market melting down yesterday, right on the heels of a major pullback on Friday. And he took action to turn things around. After all, he does want to get reelected next year. It's easy to do that when stocks are in good shape. Makes sense to you, makes sense to me. If you own stocks, if you're a bull, this was terrific news. You made a lot of money today. But if you were shorting the market, if you're a bear, this kind of action is nothing short of infuriating. Trump is a short seller's worst nightmare because even though he's an impulsive fella, can we agree with that? He's willing to turn on a dime if he's hurting the averages. So when the trade war got a little too heated, he tempered his policies and single-handedly caused the market to bottom. This is unique behavior for a president of the United States, to say the least. Love him or hate him, Trump's more sensitive to the stock market than any president I can recall. I've had the privilege of meeting several presidents, not to mention their advisors. I'm always stunned at how clueless they are about the stock market. They're like, know nothing. I got to give Bill Clinton credit for being interested in the market, but I don't think he consistently guided his decision-making. I sure wish George W. Bush had taken stocks more seriously. Maybe then he would have done something to stop the financial crisis before Lehman Brothers went under. As for President Obama, whom I never met, he was the polar opposite of Trump. Even though the stock market performed very well under his administration, he never gave you the sense that the market was a priority. I don't think Obama believed stocks were a good proxy for the economy because a strong market disproportionately benefits the wealthy. But President Trump, well, he watches CNBC among other networks. I know this because he tweeted my comments about the strength of the economy. Now, he doesn't want the stock market to get crushed because it's integral to his campaign rhetoric and to his pro-capitalist bent. You got to understand, Trump is competitive. On The Apprentice, where I served as a judge several times, he always cared about the Nielsen ratings. And in the White House, he sees the major averages, I believe, as his Nielsen's. I think the president was taken aback by the sell-off yesterday. It was like the sell-off the previous Monday. Enough is enough. The press blamed the strength in the bond market and that inverted yield curve thing you keep hearing about, where long-term interest rates have gone below short-term rates, something that suggests investors are incredibly worried about the future, meaning that they think it's about to fall off a cliff. Now, there are multiple reasons why the yield curve might be inverted, but the chief one is the decline in world trade. I get that. We have had trade wars before. Some were effective. Some were disastrous. Most economists will tell you that tariffs are always bad, even though history says, frankly, quite otherwise. That's why there's a relentless belief on Wall Street that our trade war with China is what's causing the inverted yield curve. They see it as a principal driver of the weakness in global commerce. More important than Brexit, more important than stagnating European economies, more important than a collapsing of Argentina. So when the president gives us a stay of execution on most of his new tariffs, delaying them until December, this is a very big deal for the stock market. Correctly a big deal. What was the White House trying to accomplish here with this news that came about right after my mad dash at 9:30? Okay, I think it was a genuine olive branch, something that allows the Chinese government to save face, start buying some American ag products. He stuck it to them right after this with, of course, a tweet. You know what? They need to buy some pork. They desperately need it because of a particular kind of swine flu that's proving very difficult to eradicate. And you can check that with Zoetis. They know all these things. Second, it gives the companies that were about to get slapped with the 10% tariff more time to move their manufacturing from China literally to anywhere else. Vietnam, India, it doesn't matter, as long as it's not China. ABC, anybody but China. Third, and perhaps most important, it gives President Trump cover to strong-arm our man, Fed Chief Jay Powell. He's not really our man, I don't know, it just came to my head, into cutting interest rates more aggressively. Tariffs are inflationary. We just got a consumer price index this very morning. It was a little too hot for Powell, a 0.3%, even as real average hourly earnings decreased by 0.1% over the month of July. No one talked about that number. I thought it was staggering. Their wages decreased. So much for wage inflation. Now, a 10% tariff on all sorts of goods would have pushed consumer prices up even higher. Now, Trump can use this delay to show Powell or berate Powell or browbeat Powell that there's no real inflation, which will give the Fed more leeway to cut rates. Look for some tweets saying that. Probably tomorrow. Put it all together, and you know what you got? You got a vicious short squeeze, where everything that was hated is now loved, and everything that was loved is now disliked. And I didn't say hated there, because the stocks that benefit from this day of execution were big enough to help lift the whole S&P 500. Now, I got to tell you, I think it could get worse for the bears before it gets better. China now needs to contend with a slowing economy and these militant protests in Hong Kong that have now shut down the airport for 2 days in a row. You know what? I have a hard time imagining a scenario where all this ends peacefully. I think China may need to send in the PLA, that's the People's Liberation Army. And if that happens, they'll be fighting a two-pronged war, a trade war with us and a real war in Hong Kong. In that case, I'm betting the Chinese will give in, at least on agriculture, and do some buy. There's ample opportunity here, seeing as there are a bunch of calls scheduled between both sides. Now, I'm always telling you that the hardliners in the Trump administration have more influence on trade policy. I wouldn't see this as a big loss for them, although it is a loss. See, these tariffs are only delayed until December. They're not canceled. If China refuses to come to the table, they'll end up going into effect. As far as the hardliners are concerned, that's almost inevitable because they don't believe the Chinese are willing to make any concessions at all. I disagree, but who am I? Just a TV guy. Let's go back to the original premise. Coming in today's session, the bears expected the assault on the 10-year to continue, with the yield heading toward 1.5%, a ridiculous low number, frankly. Instead, because of the stay of execution on the new tariffs, the yield on the 10-year actually went up. And all the traders who have been keying off the bond market, they use this algorithmically, they had no choice but to buy stocks or cover stocks if they were short the bottom line. The next time you're terrified that everything is falling apart and the stock market's about to roll over, remember that we have a pro-stock market president who's willing to take action to turn around the averages. Maybe that's unfair to the bears, but it's fabulous for the bulls, which more than likely includes you. AJ in California. AJ.
Booyah, Jim. First time, long time.
All right, AJ. I was going to draft you, but I think you're hurting. What's up?
My stock today, I'm asking about is Macy's M. The dividend is very appealing, and it seems to be consistent with Macy's reporting tomorrow. Is the magic still with Macy's?
Chief, listen to me, okay, and listen good. That's tomorrow's business. They're going to report before the opening. I think that Courtney Reagan even, I think he's going to get Jeff Gannett. I like Courtney. I like Jeff. The stock is signaling with a 7.8% yield that something is very, very wrong. But we'll know in 12 hours. Or make that 19. Let's go to Judah in New York. Judah.
Booyah, Mr. Cramer.
Booyah.
I have an infant on the way, baby on the way, looking to make a very long-term investment in one of your cloud kings or princes. Wanted to know your thoughts on ServiceNow or an alternative.
Boy, ServiceNow, I was talking about it with a guest. ServiceNow with John Donahoe, that's a really good idea. First of all, congratulations. What am I putting the cart before the horse there? But ServiceNow is a terrific idea. Why? Because there are going to be ups and downs, but your child is going to experience the vast up cycle that John Donahoe has put in, because that is a software as a service giant. I like your choice. Let's go to Joseph in New York. Joseph.
Hey, Jim. Booyah. How you
Booyah.
doing, pal? I'm a big Blue Giants fan. I was a 37-year Wall Streeter.
Okay.
I just retired 2 years ago. About that time, they were talking about a recession. Stock market fell off about 4,000 points. in December 2018. So I started thinking about a recession-proof stock.
Okay.
So I started accumulating shares of Match.com, MTCH, at around $14 in July of 2017. I bought it all the way up to $56 in April 19.
Right.
And it just had fantastic earnings come out.
Yeah, it did.
Yeah, and it was fueled by Tinder. 500,000 new subscribers, and the CEO gets only like $2.5 million a year total comp.
Well, I'll see what I can do about that, but I think that Match is a great story. I'm a big interactive guy. I've been behind Match. I mean, before they even had Match, I was behind Match. I think it's a terrific product. Not that I would know myself. This Tinder does get. People like in this Hinge a lot too. I don't know. It's like AI meets dating or something. I don't know. But yeah, Match is a good situation. I think you should hold on to something. Take your profit. Take your money off it and play with the house's money. 14 comes out. $80, good thing. These days, it sure seems like the president's pulling the market strings. Hey, is that so bad? At least it's on the side of the bulls, darn it. Just when you thought the stocks were about to roll over, Trump delayed tariffs on some Chinese imports. Right about after I said he should delay tariffs on Apple. Yeah, Mr. Ego, huh? Anyway, and while I think he made that call for a few reasons, I know that it doesn't bode well for the bears out there. Even I still think you can roll back a little in this game. On My Money Tonight, you know what I say? It's the S&P's world, and you and I are just living in it. I'll tell you what it means for your money. The major averages are up the first time in 3 days. Is it finally time to sound the all clear, or is there more instability ahead? We got to check in with the VIX. Get that off tonight's off the charts. And my exclusive with Zebra Technologies. Has the company changed its stripes after today's move higher? I'm going to sit down with the CEO. I urge you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.